Hey everyone, welcome back to the Daily Gold Podcast. Today we're chatting with Jeff Pontius. He is the founder and CEO of Corvus Gold. And Corvus had a news release out today. They're going to sell they're selling their entire JV interest while retaining a production royalty at their Terra project in Alaska. Corvus will receive $6 million in cash and 750,000 shares from their joint venture partner. Jeff, can you just explain the rationale behind this decision and maybe go into the release a little bit further?
Sure. Thanks, Jordan. Really, it's keeping with our strategy the company has had all along, where we take our non-core assets and try and leverage those assets into the greatest value for our shareholders. And I'm sure you know that your listeners of the market that we're in today, and this is a great opportunity for Corvus to raise needed capital to advance our primary asset, our North Bullfrog project in Nevada, along without having to take dilution in the company at these prices we're at today. So I think it's a good win-win situation. It definitely, our joint venture partner gets more control of the project and has an easier time, I think, marketing their interest in that project. We retain a royalty, a pretty lucrative royalty for us in the long term to give us some long-term value in this project as we go forward, and a block of our partner's shares. So if they do well, we're going to do well as well. And it's been a good transaction, I think. And it'll be important because this provides us with the financial wherewithal we need to complete our very important 2013 development program in Nevada.
Right, and let's talk about the North Bullfrog project, because obviously you guys have been seeing some excellent results there. I mean, you've put out some preliminary economic assessments, 2 of them last year, or I should say in the last 12 or 13 months or so, that were very encouraging, and we've talked about that and the drill results in the north area. But before we get to the potential in the north area, let's just first focus on some of your recent press releases. The metallurgical tests that you guys have been doing have been coming back, and the numbers have been they've been gradually higher and higher as far as potential recovery. Can you go into that?
Yeah, that's been a very, very important aspect of the project. We've always taken a fairly conservative look at recovery on the project. We definitely want a robust project that's going to make sense for us, and once we get it up and running, we certainly want to be able to achieve the metrics that we lay out in the development plan. But we've seen significantly better recovery from our column leach tests, which are very rigorous test sequence that we've done on all the deposits now. Most importantly, our first phase project, our Mayflower project. That's really given us the confidence to look at options for the Mayflower project that would significantly lower the capex. And one of those will be processing the rock, run a mine. Basically, we shoot it in the pit, we haul that material to the leach pad and leach it as is, and don't go through the crushing and sizing process that was originally proposed in our latest PEA. So that in total, if we can actually do that, could save us in the neighborhood of about $5 million of CapEx. That's very important for a small CapEx project like this. It's over 10% of the CapEx, and so it's going to be a meaningful change to the project. And it looks like recoveries could be very similar to what is currently in the PEA that we have now with crush material, as these recovery numbers have come back quite good. And it also lowers our OPEX costs because we don't have to maintain and operate that crusher and all the equipment associated with it. So that's a really important factor that's come back. And we've seen some of the initial test work from the north area, which is our real development target right now. It's the sort of future of the mining operation right now, and it is our largest resource out there in the neighborhood of 1 million ounces right now in pit. So those numbers have continually come back quite good as well. So we're very encouraged that we'll be able to look at some different kind of process techniques going forward that are going to be much more cost efficient for us.
Right, and I know the north area, specifically Yellow Jacket, and I believe Sierra Blanca also. Those are the areas you're going to be getting after this year. And Jeff, we've talked about the potential before, but just for the new listeners and the new people who are they see the decline in the share price with the market, and they're now more interested and they want to hear more about it. Why don't you just tell them what exactly is going on, or what you plan to do this year at those targets in the north, and what the potential is?
Yeah, we have a three-prong approach this year that we're now fully funded for. So, and that is first and foremost, get the permit and get ready to go to construction for phase one early in 2014. Number two is how big is the North Area deposit? We need to assess how big this deposit is so that we can position ourselves to begin the permitting process for that particular deposit next year about this time. And then number three, and probably the most important one or the most interesting one to us, we've had some very good success defining a high-grade vein system. This has returned intervals of 50 to 80 meters in the neighborhood of 1.5 to 2 grams a ton over an area we call the Yellow Jacket right now, which is just on the border of our current pit design. All of these intersections are within open pit mining depth, and so they present a very attractive starter pit area. And in addition, we've done some surface work over the last 3 months in the north area, northern extension of the Sierra Blanca pit. This is material that is not currently in the current pit design. We've got a few scout holes out there, and the surface work indicate that at surface and down to about 50 to 60 meters, we have a very significant higher grade portion of the Sierra Blanca deposit that is above 0.5 gram per ton. For us, that's very exciting material to have sitting at the surface. It looks deeply oxidized, and it looks like it could be good material to augment that starter pit area. So really what we're focused on this year in those areas, that north area or the north part of the north area, is to define the starter pit for the north area. Yeah, this is new mineralization, never been added into the resource base yet, and it's significantly higher grade than what's in the current resource base. So this is going to have a pretty dramatic impact on the economics of the north area, and it's a very exciting time. As we're doing that, we're going to continue to try and expand our high-grade vein system that we see. We love the fact that 8 kilometers down the road from us, there was a 2.5 million ounce high-grade vein system that was mined by Barrick in the 1990s. This area could host significant high-grade vein mineralization as well. And the fact that we've drilled into this type of mineralization where we have intervals of anywhere from 2 to 5 meters wide that is exceeding 10 grams a ton gold and in the neighborhood of roughly about 10 ounces a ton silver, that's really dramatic for us. And so we're really excited about being able to get back in there and get after that. So you'll see us start up the drill program here in the next few weeks, and we'll be getting ready to go after that high-grade mineralization. How big is the north area so that we can use it in permitting, get that starter pit defined, and get that permit in hand by year end.
Jeff, I know you've worked in this experience a long time, or excuse me, you've worked in this industry a long time and have had substantial success. I mean, in your opinion, and you know, as we see right now, even though the metals prices are relatively high, there's so many companies out there that are struggling. I mean, in your opinion, you know, what should investors be looking for, and also what do some of these companies need to do to better perform?
Well, I think it's at a very difficult time for investors. There's a lot of perceived risk in the market, particularly for commodity companies, I think, and So it's fully understandable that investors are nervous about investments right now. But if we look back at the cycles, and we are in a down cycle right now, the real money is made in this business by investing in the down cycle. And when we look back at '08, which was a very terrific opportunity to invest in companies like Corvus Gold and others that have good quality assets, they're well funded, they've got a good shareholder base. Those are the kind of things that are going to make companies survive through these downturns. And when the up comes, the up can come at any time, and the up can be pretty dramatic. So, I look at these times as great opportunities to invest in quality companies that have a solid game plan, good financial backing, good shareholder base that can move forward. There will be, unfortunately, as always in these down cycles, quite a bit of carnage that goes on, and there will be definitely failures that will happen. So investors need to be very prudent about what they invest in, and they need to right now look for quality, because everything is at a fire sale price, in my opinion.
Well, Jeff, you guys have performed, considering we've been in a down cycle or a cyclical bear market for almost 2 years now. Corvus Gold share price has performed very well in that period, even given the pullback here. So I think you would agree it's a great opportunity for investors with the cash in their portfolios to take a serious look at companies like Corvus Gold and others that meet the criteria you were talking about.
Yeah, I think it's going to be a great opportunity time, and as the Chinese have a symbol that means opportunity and danger, and it's the same symbol. So it's a very interesting time to be in here, and the last few of these I've went through have definitely been extremely rewarding for me.
Okay, Jeff. Well, we've covered a lot here, but just in case you have any thoughts left, do you want to share them on anything we didn't cover?
Well, I think, one of the key features that we're seeing here right now is with our project in Nevada, we've defined a very large footprint. And one of the things that is very exciting to me on being an explorationist or an exploration geologist is to get inside those big gold footprints and unravel what the feeders are that are coming into those footprints. And I think we've got a great opportunity here at Corvus to unravel that, not only in the Yellow Jacket area, but we have a number of other targets that could bear fruit for high-grade vein systems. And these epithermal high grades in western Nevada have been extremely profitable projects to be involved in. So tell your listeners to stay tuned. We have a lot more information coming over the next few months.
Okay, Jeff. Well, thanks so much for your time today. I really appreciate it, and we'll definitely have you back to discuss the future developments with Corvus Gold.
Thanks, Jordan.